Hey guys, it's just Madel here, and today I'm going to be talking about the tax reform and how it will personally affect me or us because I'm married. So I can only speak for myself because obviously we're in different income levels, different situations. Some are married, some are single, some have kids, and all that. So we're all going to be affected differently, but hopefully I can share some of you the insights on how I think about it. So it's currently end of January right now of 2018. So obviously, if you're in the US, you should probably be getting some of your tax forms, like your W-2 if you're employed. If you're in school, your college or university would send you a tax form indicating how much you paid for their school. Some of your health insurance would also probably getting sending you forms. So I think this would be the perfect time to think about your taxes as you prepare your returns for 2017. So I just wanted to first and foremost, before I start, I just wanted to be clear that whatever I share with you, this is not tax advice, all right? This is just me sharing my knowledge. And so definitely, if you have any questions, you ask your tax advisor. So before I start with how the tax reform changes will affect us, let me just break down how your income tax is calculated. So for example, if you make $100,000 as a couple, so that would be called your gross income. And then you can take either the standard deduction or the itemized deduction. So for 2017, I think the standard deduction was $6,000. So for the two of us, let's because I'm married, so for that would be a deduction for $12,000 because 6,000 times two. I'm saying that as an estimate, by the way. 6,000 is not the actual number. It's just an estimate. I just check Google because it constantly changes based on inflation. So that's why I'm just giving you a rough estimate. So for 6,000 standard deduction times 2 for my husband and I, that's a $12,000 deduction. So from 100 I can deduct 12, so that would leave us 88. And then there's something called personal exemptions. That's just what they call it, but basically you can deduct more. So I think for 2017 it was around 4,000. And then you get more exemption, like if you're over a certain age, I think over 65, or if you're blind, then you get more exemption. And if you have kids also, then you get more exemption, or other dependents, not necessarily kids. So for us, we don't have kids, so we can only take an exemption for the both of us. So 4,000 times 2, that's gonna be 8,000. So let's say start with 100,000, like I said, minus 12 for the standard deduction, which is 88, minus 8,000 for the exemption, which is 80, and then that leaves us with $80,000, and that would be called your taxable income, and that's how you're going to be calculating your tax rate. So the tax reform changes, there's several, but basically the goal of that tax reform changes was to simplify the tax code. And there were major changes on the corporate side, like from 35% to 21%. But for individuals as well, there were changes on the income tax rates. So I can't specify for everyone because there's too many options, but definitely check online on the IRS website. Like they have form instructions and you can see which is your tax rate that is applicable to you. So what are the changes? Like I said, it's the tax rate. So for us, I think in 2017, we're gonna be in the 25% tax bracket. So with the tax reform, it's gonna be changing to probably 24%. So okay, 1% difference, it's not gonna be a big deal. You're right, it's not gonna be a big deal. But so let's say in that example that I gave earlier, if we're making $100,000, 1%, that's $1,000 extra in our pocket. But then if you divide it by 12 months that we're getting a paycheck, it's not going to be a big difference to our monthly budget to get the tax reform done. The second change how it's gonna affect us is on the standard deduction. So like in my earlier example, I said that the standard deduction for each person was around 6,000, and now they raised it to $12,000. So wow, so now you're getting more deduction, $12,000. So that's supposed to be good on first glance, but then actually it's not such a big deal because they removed the exemption. So in my earlier example, they removed the 4,000. So then it's not such a big deal that they double the deduction but removing your exemption. So that's why as I go through this video, you'll kind of see that I'm not really very supportive of the tax reform. And then the last way that it's gonna affect our taxes for next year is on the limitation on state and local taxes. So I have our tax return on from 2016 in my hand right now, and so the limitation on the state and local taxes would be 10,000 starting 2018. State and local taxes are your income tax if you're in an income state like Virginia, California, New York. If you're in a no income state like let's say Nevada, then you're just deducting your sales tax. Other taxes that you can deduct are your personal taxes, like if you own a house, real property tax, personal property taxes on your car. So those things you are able to deduct, but only up to $10,000. So in 2016, we deducted 10,514 on that line, and so that means in 2018, if all things are the same, then we won't be able to deduct the additional 500. Because our income will probably change in 2 years. It's probably going to increase if you get promoted or if you get some kind of inflation adjustment on your income, then your income taxes will increase, and then we won't be able to deduct as much of that state and local taxes. So in conclusion, so those were the 3 things that I think is gonna affect our 2018 taxes. Number 1, it's the tax rate, like I said, from 25 to 24. That's just an estimate. Number 2 is the standard and personal deductions. It's not really gonna be a benefit for us to double the standard deduction because we itemize anyway. And then third is the limitation on state and local taxes. So if you are in a high tax state like California, New York, you're probably paying more in property taxes like real and personal. So it's really gonna limit you on being able to deduct that amount. So hopefully this video was educational for you. And with that, bye!